You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mikey Hu. Hey, what's up, Market Moose? Mike from The Moose on the Loose. I hope you're doing well on this Wednesday, that you did not celebrate it too much on Canada Day yesterday. Probably did it on Monday, right? Anyways, today I'm going to talk about a management team that probably did not celebrate it that much last week after reporting their earnings. Alimentation Couche-Tard, Another slump, another bad quarter. The stock's not doing well. Year to date, down 15%. 12 months, down 11%. Actually, if you look back under the stock price, how it evolved, it was a darling, doing a lot better than TSX and doing everything right until towards the end of 2024. Of course, there was a few bumps, but after that, towards the end of 2024, we had the first chatters of Alimentation Couche-Tard going after 7-Eleven convenience stores. We're approaching the mark of 1 year, and still the future of that transaction is blurry at best. 7-Eleven doesn't really want to sell. ATD's going after it. The market doesn't like the cost it would generate a lot of more debts, probably issuing more shares, so diluting the value. So definitely a bad call at this point from the market. The market doesn't like it at all. So on top of that, we have weak numbers. So for the latest quarter, so what should you do with a loser in your portfolio? I mean, for the past 12 months have been very bad. Even the past 3 years, I mean, it's positive, but it's now lagging the market. And this year, if you bought at the beginning of the year thinking, oh, this is the time it's going to bounce back, well, you're down double digit as well. So not cool. So I do have a methodology to analyze stocks when they are down in my portfolio. And the first thing is to know where the loss is coming from. Is it the market? Is it the sector? Or is it the company? So in this case, I mean, the market is going up, so that's not a problem. Sector in general, convenience stores are not doing that bad. The economy is still relatively strong, so the consumer sector is doing okay, so that's not a sector thing either, because sometimes you will see for example, higher interest rate in 22 that hurt specific sectors more than others, like technology, like REITs, like utilities. So then you can think, okay, so it's a sector thing, my stock is not worse than any others, it's all good. But in this case, it's really a company problem. So for the company problem, now it's time to look at the numbers, because the numbers will tell us a stronger and more complete story about what's going on. So latest quarter that was reported last week, revenue down 7.5, earnings per share down 4.2, adjusted earnings, of course. So I mean, down mid to high single digit on both, super important metric. Lower fuel sales, that was one of the thing that happened in the US, especially. So that drove all fuel sales were down because fuel price is down. So that's a bummer already. But merchandise was actually good, up 2.4%. So, and earnings per share were down on higher tax rate, higher operating expenses, because they're spending a lot more on acquisition and strategic integration and so on. Plus, it was partially offset by better fuel margin. So lower volume, higher margin. So at least a little bit more profit over there, but still was a disappointing quarter. Management said it was due to difficult economic and politics situation. Yeah, I mean, it's the easy way out, let's be honest. Maintain, their goal was to maintain pretty much the same store sales. Actually, they did well, because in the US, it was down by 0.4, so not even 1%, but up 3.4 in Europe, up 3.5 in Canada for same store sale. So that was good. It was driven mostly by their food and beverage offering. So again, their plan is partially working. What's not working is the fuel, and what's not working also is the economy in general. So let's talk a little bit more about the negative from this quarter. It did not generate a huge wave of sentiment on the market. The stock price was down a little bit, but not that much. It was mostly just, bad quarter, don't really care. It's been a few quarters now. It's been a year now that you suck, so don't really give you much attention. The problem here, the Alimentation Couche-Tard struggles to generate growth, like no revenue, no earnings growth. So you may wonder, is it like, did they reach their business model limit? Are they going to be able to find ways to grow their business again? And the other question is the 7-Eleven talk, which was not discussed too much in the earnings call this time. They're just like, oh, we're in talk. Everything is like in a locked room right now, and nothing is getting out of that room. So unfortunately, it remains a distraction. The uncertainty kills. I keep on telling you. So on one side, you have a business that has struggled to generate growth, and on the other, you have like another layer of uncertainty. Definitely not a good package at this point. There are some positive, though. There's some positive notes. The first one is some of the initiatives from their plan to grow organically is actually working. Food, fresh food, packaged food, meals that are there, the beverages, the promotions. It's not doing that bad. So at least this part is showing some growth. The integration of Total Energies, gas station, and convenience stores is on plan. Everything's on track. So that part is doing well. Not really surprised here because they've been acquiring so many brands, so many not restaurant, but convenience stores chain over the time. And it's usually a success. So that's not a problem. But still, I mean, it's positive news. And the other thing is that was like their strongest quarter in terms of cash from operation. So cash flow from operation, it's 7 billion. So they're making a lot of cash flow. ATD has a very solid balance sheet right now. They're generating a ton of cash flow. So those things are very strong, and that will help them to move around and find other growth vectors in the future. And finally, we need to know what's going to happen with 7-Eleven stores. I mean, buy it or don't buy it, but please move on. It takes forever. So that is definitely something that is dragging. So going back to what should I do with a loser in my portfolio? Once I establish that the problem here is coming from the business, I've reviewed the quarterly earnings. It's pretty much the same song for the past 4 or 5 quarters right now. So what I do after that is look at my investment thesis versus the numbers. So my thesis remains solid. Like the narrative around Alimentation Couche-Tard, I mean, they benefit from a huge scale, buying power, huge network. They have this playbook to grow by acquisition that works all the time. They have a solid management team. They found new initiatives to grow merchandise as well, focus on that. They're installing charger for EVs. They're doing all the right things. So in terms of the narrative, nothing has changed so far. They have a clear plan for growth. Everything is there. Now, the numbers are not confirming entirely the thesis, obviously. So we have weak growth and weak earnings per share. Actually, nothing it's not even growing. It's like slowing down right now for the past 12, 18 months. So no good numbers here, telling me that the business is struggling to find growth. Not a good sign. And of course, it drives the stock price down. Now, if you take a step back and look at the past 5, 10, 15 years, definitely not the first time that you have revenue and earnings slow down for Couche-Tard. It happened several times in the past. It is a cyclical stock, even though they will go through recession without much hurdles. They will still show also weaker numbers. So whenever there's an economic slowdown, it will be felt in the revenue and in the earnings. This is what we see right now, but we have seen that several times. And in every single case, a lot of people were like ready to climb up the mountain and scream that Couche-Tard was dead money. The stock price did not do well during those times back then, is not doing well right now. So it is exactly like the same story re-happening again. Of course, for a comeback, we'll need to have like more growth. We'll need to have like more excitement. We'll need to get like a clarity on the 7-Eleven deal. Those things need to happen before you get back on track and to growth mode. But it's not an unusual situation for Couche-Tard. I've seen that movie several times, so I'm not worried. So now that I've decided I'm going to keep those shares, and I'm good because the numbers should come back. Now it's time to determine a time frame, because there's a limit of time that you should wait until a company brings back numbers on the table, because they could do that in like 15 years. Well, I'm not going to hold a stock that is dead money for 15 years either, right? So time frame, usually I try to get like 2 years, maximum 3. In this specific case, it's my second largest holding. I am willing to wait for a total of 3 years. It's been already 1 year of bad results, so there's 2 more years left. But as I told you before in other shows, I like to follow what steps are being made, and right now everything is being made according to management, what they say for the long-term plan. So I'm going to trust them for now, and I'm willing to wait 2 more years. Of course, I'm going to follow those quarters, so you're going to hear back more about Couche-Tard in 3-4 months from now, but just keeping my eyes on it in the meantime looks relatively strong, so I don't worry too much. So, all right, so that's enough for today. Tomorrow, I'm going to talk about Enbridge. We're going to take a second look at it. You remember I sold it in 23. That was a good move back then. Now it came back. Maybe I should have kept it. Who knows? Is it set to surge again? Let's take a deeper dive tomorrow. And until then, don't forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.